Today, we will examine what liquidity pools are, why they are useful, and how they work. You want to stick around to the end too, because we are going to share with you the best 3 liquidity pool platforms that you can join today. Okay, let's dive right in. What exactly is a liquidity pool? A liquidity pool is a pool of crypto volunteered by holders that keeps supply and demand balanced. Liquidity pools maintain a more stable price for a given asset and promote a better user experience by speeding up the processes of buying and selling. In other words, a liquidity pool is put in place to make sure there is always enough crypto to be bought or sold. This sounds interesting and all, but you might be wondering, what is the purpose of a liquidity pool? In the early days of decentralized finance like crypto markets, there was a big issue with liquidity. Buying and selling wasn't always as straightforward and painless as it is in the stock market. Liquidity pools solved this issue, and I'll explain why. Let's start with defining liquidity. When a market is liquid, that means that you can generally buy or sell at any time and be met with the price you expect. If a market is illiquid, that means that you will struggle to find a seller when you want to buy or vice versa. This all comes down to how much of the asset is available for trade. In the stock market, liquidity is provided by what we call market makers. Market makers are organizations that have made an agreement with the stock exchange to hold shares of all the stock that is being traded. Then, when someone wants to buy a stock, they don't have to wait for a seller. The market maker sells them the stock, assuming someone else is bound to sell their own stock sooner or later. In this way, market makers keep the money moving, keeping the market liquid and easy for users to exchange. When it comes to crypto exchanges, there are no market makers. Instead, liquidity pools serve the same purpose. In the case of liquidity pools, there is no organization playing market maker. Instead, an automated system facilitates the trades in and out of the crypto pool. This way, you don't have to worry if there is someone who will buy your Ethereum or sell you Dogecoin. The automated liquidity pool will buy and sell to keep the money moving and keep everyone happy. Liquidity pools are created by actual crypto holders themselves. Holders can lock in their crypto to the pool and in return are rewarded with a percentage of the fees and often specialty tokens that can be used in other crypto markets. With enough contributors to the pool of crypto, the supply of crypto remains liquid. Okay, so now we know what liquidity pools are and why they're valuable, but how do they work? In most cases, a liquidity pool is made up of 2 or more different cryptos that are being exchanged back and forth. So on an exchange that utilizes liquidity pools, Ethereum and Solana share a pool. So does Ethereum and Bitcoin, as well as Bitcoin and Solana. Crypto holders are incentivized to lock in their cryptocurrencies to these pools and must do so with a 50-50 split. This is to keep the pool relatively balanced. Unlike a stock exchange, the price isn't directly tied to how much people are paying, but instead is calculated by the automated market maker. Of course, the price change certainly reflects the investor sentiments. The ratio of one token to another within the pool helps determine the price. For example, if someone traded a ton of Ethereum for some Solana coins, the price of Ethereum would lower because there is more in the pool. Naturally, the price of Solana would rise because there is less in the pool. Liquidity pools are one of the most useful innovations to have come from the world of decentralized finance. Not only do they eliminate the need for an organization to act as a market maker, but it has also greatly reduced slippage. Slippage is a term for the discrepancy between the price you thought you would be able to buy or sell at compared to the price when the trade was actually made. As you can see, having a liquid pool and an automated market maker speeds up the process and decreases slippage. Next, I'm going to tell you about 3 powerful digital asset exchanges that utilize liquidity pools. But before that, I thought I would recommend another recent video of ours. If you are interested in digging deeper into the decentralized finance world, watch our video, Crypto, What is DeFi Insurance? Okay folks, let's take a look at what exchanges are actually using the magic of liquidity pools. You will want to know which ones do and don't because there are great benefits for users of these exchanges. Like we mentioned before, there is less slippage, quicker trades, and even the opportunity to profit as the liquidity provider yourself. The first exchange I want to share is Uniswap. You've probably heard this name before because it is quite popular. This exchange facilitates trades between Ethereum coin and any other coins that were minted using the Ethereum blockchain. Uniswap promotes the idea of liquidity pools and even gives all users the opportunity to create their own liquidity pools with 2 pairs of tokens. The second exchange you should be aware of is Curve. Curve is an interesting platform because it provides liquidity pools for stablecoins, again, based on the Ethereum network. Stablecoins are cryptocurrencies that are tied directly to the price of an outside asset like the American dollar or gold. Because stablecoins are exactly that, stable, you will find even less slippage on Curve's exchange. The third and final platform worth noting when it comes to liquidity pools is Balancer. This exchange is heavily based on liquidity pools. It even offers support for private pools and caters great benefits for liquidity providers. All of these platforms offer the chance to become a liquidity provider yourself and add to the pool. In return, you'll get valuable tokens and a portion of the transaction fees. If you're looking for more passive income, this might interest you. Now, there are several ways of making passive income, and if you're into this subject, you should definitely check out this video where I cover how you can make $300 a day.